Big legacy banks like JP Morgan thrived during the financial crisis of 2008, aka The Great Recession. But will the fintechs succeed in a market full of chaos? SOFI's Liz Young thinks that the banks won't be bouncing back anytime soon.
Inverted today, which we all know is not good for financials, right? And as borrowing costs rise, that's going to hurt their opportunity for revenue.
People fear recession. Whether you're an investor, a business owner, or just an ordinary consumer, it always sounds like the end of the world.
The sky is falling! The sky is falling!
SOFI's lending segment is actively growing, even without the student loan repayments happening along with multiple interest rate hikes from the Fed. Do you think a fintech like SOFI has what it takes to survive a recession? Lately, we've been hearing the word recession thrown out there, and you know what?
Recession sucks.
But are we currently in a recession? According to NerdWallet, it may not be official, but based on the traditional definition, the US is currently in a recession. In this video, we'll discuss how fintechs like SOFI can be recession-proof and why we think SOFI is one of the best deals on the market today. We are not financial advisors, and this is not financial advice, so always do your own due diligence. According to Investopedia, we have 4 steps of what we call an economic cycle, between expansion and contraction of the economy or the rise and fall of it. When this happens, you typically hear the words interest rate and consumer spending more often. But now, let's talk about the stages of a recession. Stage 1, denial. Expansion. During expansion, you see a lot of low interest environments and an increase in production, but inflation is only starting to build up. It's the golden era of the economy where it just keeps growing. Stage 2, peak. The next stage is the peak. This is where the momentum stops because there's too much economic growth and it is not only unsustainable, but it has already reached its limit. Stage 3, contraction. The last 2 stages are a free fall from the heavens. Remember Icarus, who flew a little too close to the sun? This is kind of like that. Growth starts to slow down, all along with the number of people employed. Inflation is supposed to die down at this stage, but at the last stage of the cycle. Stage 4, trough. This is when we reach rock bottom. The only good thing about hitting rock bottom is once you get there, the only place to really go is up. So what? Right now, we're bombarded with news every day that's telling us whether or not we're entering into a recession or prolonged stage 3 of the cycle. Let's hear SOFI's Liz Young's take on inflation at the beginning of 2022.
Every single wave that we have of a new variant, we get over faster. And I think that will continue to happen. But what we saw with this last wave is that it impacted supply and not demand, which tells me that inflation is still here to stay for the first half of 2022, and it means that the Fed has to move. They made a pretty clear pivot at the end of 2021 to say, okay, the labor market is better, inflation is now our top concern, so we're going to continue to see that headwind.
The US market is still on a 1v1 with inflation when the inflation rate went from 8.5 to 8.3 last August, but it's still currently near a 40-year high of 9.1%. But how are the banks affected in this game?
So that's what I was going to get to. I think in the next 90 days to 6 months, they probably don't work great. Rates are up, but we're more deeply inverted today, which we all know is not good for financials, right? And as borrowing costs rise, that's going to hurt their opportunity for revenue. And you look at things like housing affordability spiking higher. So there's not a ton of revenue opportunity in the near term. But if you look at the valuations, I think in the last segment, you guys were talking about energy being the lowest valued sector in the index. Financials is the second lowest. So they've already gotten killed and they haven't had a ton of upside opportunity this year. It is a good time, I think, to start dripping in, even if we're late cycle. But then you got to hold it into the next cycle.
SOFI Bank is obviously a bank. At least they identify as a bank. Or maybe they identify as a fintech. We here at Wealth Gambit identify as SOFI and Soldiers. But what would a recession look like for fintech? According to Business Cloud, there are 2 scenarios for fintech. Either they thrive in this era, or they will get crushed before they even see the light at the end of the tunnel. If the legacy banks manage to beat the growing popularity of fintechs during a time like this, fintech startups that lack capital and assets may not make it through. Last August, Robinhood even cut its workforce by about 23%. Sheesh! But if fintechs manage a win over the legacy banks and take charge of the industry, fintechs could outmaneuver the legacy banks with a new wave of innovation in their product and services to support struggling consumers, businesses, and investors during recessions, according to Business Cloud. Now, Here are 3 key elements that all fintechs need to be successful in a recession. Number 1, strengthening trust. Customers are the lifeblood of any business. They keep the business running, even in skyrocketing inflation or any other scenario you can think of. And it's not just important to engage with the customers, but also to strengthen their trust. You wouldn't want a bank that leaves you with nothing but piling fees, giving you 0 solutions to your finances, especially when the economy is in chaos. Now is the time for fintechs to show off the tech in fintech, not the fin in tech. That focuses on innovating financial products that answer every customer's changing needs. Recently, SoFi's tech segment Galileo expanded its existing payment risk platform that specializes in fraud analytics and payments with a partnership with DataVisor, a company with advanced AI tech combined with top-tier and fraud and risk management. This helps many businesses lower the risk of fraud whenever they receive payments from their clients and get customized solutions with a flexible API or application programming interfaces. But let's hear it from the GOAT himself, Anthony Noto.
Yeah, one of the things that we've seen going back to our overall strategy of, using our different products to build a relationship with members, and from that relationship build trust and reliability. So when they want to use a second product, they choose us, and we get great financial and operating leverage in addition to more data to better serve them and help them get their money right. What we've seen in the SoFi Money product, the checking and savings account product, as we've raised the APY, the quality of the customer, their FICO score, their credit profile has also increased. In fact, sets us up really well for future opportunities to serve them on the lending side. I would say that
Number 2, agility. You know how they say, listen to your customers before they listen to your competitors. How consumers change behaviors each day with this ever-changing economy is exactly how fintechs will find leverage against legacy banks and meet the market's demands. According to Marqeta, adapting a fintech's products to cater to the changing market behavior in swift moves can instantly improve customer experience. Number 3, flexibility. Don't forget to stretch. Fintechs have different customer segments like any other business. They craft and execute marketing strategies as they target and acquire new customers. But what they don't know is that new customer segments may come up during recession, and fintechs should not back down. Each segment has a unique in-demand digital banking solutions that will help them get their money right. So in essence, it's a battle of speed to serve their customers more effectively and efficiently than legacy banks. When the financial crisis happened in 2008, AKA The Great Recession, the banking sector lost a lot. Many US consumers defaulted on mortgage loans, the banks lost a lot of money, and eventually, banks took the worst hit when they stopped lending to each other, and it became tougher for consumers to get credit. According to Reuters, the big banks or the big lenders won't be as affected when this happened. In fact, Jamie Dimon's JP Morgan was able to stay alive during that crisis and still remained profitable. But what about fintechs? Will this be the end of SoFi and the fintech industry? Commander Noto's game to serve the underserved and get their money right is a work in progress, and every single quarter we see nothing but results. Even with the student loan repayments on hold, which have been the target for SoFi short sellers, SoFi's lending segment has been on fire. At the recent Goldman Sachs conference, here's what Commander Noto had to say about this.
There. In a more tougher environment, we'd likely be more conservative. In the current environment, our loans are performing quite well and still better than they were at normalized rates in 2019, which we suspect they'll go back to. So great product, really low market share, and continue to grow the business. On the student loan side, with the moratorium ending at the end of this year, we could see a really nice benefit of the tailwind from the student loan business. There's $1.7 trillion of unfinanced student loans with an average cost of about 6% for graduate loans. That demand coming back, combined with still strong trends on personal loans, will be the first time in a number of years, almost 3 years, that we've had both those businesses doing well with tailwinds.
As far as we know, SoFi is doing all the necessary groundwork to get to the place where the big banks are. The only difference is they're now more than ever ready to disrupt the market with a healthy serving. Anyways, a special shout out to everyone in our Patreon community who helps to make these videos possible. You know the drill. Shouts out Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufron, Jay Bone, and the man Allen. If you guys want to check out our Discord, for those of you who want a place to talk all things SoFi, check out the top pinned comment below or link in the description. And anyways, thanks for the support like always, and we'll see you in the trenches. Until next time. Peace.